Hello, and welcome to TSX Investment. This analysis is for Barrick Mining on the Toronto Stock Exchange as of 16th of August 2026, with a share price of 57 Canadian dollars 80. The full report is on TSX.ca. A profate wait-for event override holds the short horizon until the 19 August FOMC minutes clear, and the long horizon steps down from strong buy to buy on a restruck P/NAV anchor. The anchor, not the business. The short-term call is wait, and it is worth being precise about what that means. It is not a view that the shares are unattractive. It is a rule. The Federal Reserve minutes are published on the 19th of August, inside the 3 trading day window before which this framework will not open a short horizon position in a gold miner, because the metal's price is a direct function of real rates. A second and independent ground reaches the same place. The short technical confirmation cap. Either one alone would hold the horizon. The next report is dated the 20th of August, 1 trading day after the minutes, which is when that override lifts. Medium and long both read buy today. The long horizon comes down from strong buy to buy, and the mechanism matters. Amplification to strong buy requires the valuation ratio to sit outside the full band and the driver score to clear 65. Neither holds. Price to net asset value is 1.218 against a warranted 1.0, which puts it in the full band, and the driver score came out at 64. So the amplification is barred, and the base buy stands. Note what did not happen. The valuation ceiling gate did not fire, because 1.218 sits below the 1.4 expensive threshold and below the materials guardrail of 1.5. This is a downgrade of emphasis, not of verdict. The valuation score fell from 65 to 48, and read that correctly because an earlier version of this report described it wrongly. The anchor basis changed this run. The 4th of August report struck it on a clean earnings multiple and recorded 0.85. This report strikes it on price to net asset value, with the net asset value discounted at the framework's own required return of 9.13%, which is what the method specifies for a miner. That gives 1.218. Those two numbers are not comparable, and the move between them is not a deterioration in the business. The prior ratio cannot be restated on this basis at all. An earlier draft attributed the change to a broker cutting its net asset value. That was not the cause, and the claim is withdrawn. The downside here is live rather than theoretical, and it deserves equal billing. The bear path is 38 Canadian dollars, minus 34.3%, and it needs only that the gold correction resumes rather than ends. The metal losing its 50-day average and retracing toward a $3,500 deck, which would cut net asset value directly. The tell that this is not a tail. Gold's 8-week momentum is just 0.49%, and the metal sits 2.36% below its 200-day average. A cost trigger can fire alongside it. The net asset value is struck at the top of cost guidance already, so any overrun above $1,950 an ounce cuts asset value straight away, widening the roughly $450 cost gap to the lowest cost senior producer, and the price already sits 21.8% above the net asset value fair line of 47.47, which is precisely why the fundamental entry path is shut. Now weigh the risk against the reward. The bull case is roughly 56% above today, the base case, the most likely, about 9%, and the bear case a fall of about 34%. So you are risking about 34 to make 56. So our call on Barrick Mining on the Toronto Stock Exchange: wait short, buy medium and long. Remember, this is for education, not financial advice. Always do your own research. This analysis is by TSX Investment at TSX.ca. The link to the full report is in the notes below. Have a great day.